Very good morning, everyone. Hope you all must be doing great. Today, I'll be discussing some important concepts of salary with you. The first one is house rent allowance. So, whenever this house rent allowance adjustment come in your question, so first of all, please make sure that which particular regime the assessee is following. If say the assessee is following default tax regime, that is 115 BAC if he is following, in that case, please make this HRA as fully taxable. There is no exemption in that case. Please make it fully taxable. It is very easy, but sometimes students forget about this. So in case of default tax regime, no issues, make it fully taxable. But in case the assessee has opted out from the default tax regime, if the assessee has opted out, or in other words, they are following optional tax regime, in this case, whatever is the HRA which the assessee has received, deduct some exemption out of it. So let's say the HRA, first of all, you have to write HRA received, whatever is the amount, write that amount in the inner column and subtract from this amount exempt amount, that would be least of the following, right? And there are three things which we have to see, and out of those three, least of those would be exempted. A, B, or C, or 1, 2, 3, whatever you may call it. A is actual HRA. So whatever is the actual HRA received, you can write it also over here. The first point is actual HRA. Second, I believe that you are able to recall your concepts. Second is rent paid minus 10% of salary. Second is rent paid minus 10% of salary. What are the components of salary? I'll be discussing that as well. And the third one is 40% of salary. However, in cases where the employee is paying rent in Delhi, Mumbai, Kolkata, Chennai, we understand 4 metros. In those cases, instead of 40%, we will take 50% of the salary. These all three concepts are clear to you. So whatever is the, first of all, if the assessee is following default tax regime, no problem, make it taxable. There is no exemption. This exemption is only allowed if the assessee has opted out from the default tax regime. So whatever is the actual HRA, subtract least of these three. Least of these three you have to subtract. Actual HRA, rent paid minus 10% of salary. What are the components of the salary over here? There are three components of salary which you have to take it over here. If any of them is missing from the question, it's fine. But at most, you have to take three components. One is basic salary plus DA. Entire DA? No. Only if it forms part of retirement benefits. If it forms part of retirement benefits, then only you have to take that DA. See, if nothing is mentioned about DA, that how much forms part of retirement benefits, please do not take that DA. You have to take only that DA that forms part of retirement benefit. I believe you got it. Basic salary plus DA if it forms part of retirement benefit. I'm emphasizing on this word, if it forms part of retirement benefits. And the third component, generally it is missing from the question. If it is missing, you can ignore it. But if it is there, please take that component as well. The third is fixed percentage. Fixed percentage, not an amount. It should be fixed in percentage. What it is? Fixed percentage. Commission on turnover. Commission on turnover. Got it? So these are the three components which you have to take from in salary here, and here. So in optional tax regime, find out these three: actual HRA, rent paid, whatever is the rent paid by the employee, minus 10% of salary, whatever the salary you have computed it, take it 10% rent paid minus this. If the rent paid is zero, if the assessee has not paid any rent, then of course this B would be zero, least of the following would be zero, nothing would be exempt, make it entirely taxable. This is just a calculation, and I believe that you got it, right? So if the assessee is paying rent, there would be some exemption. If the assessee is not paying rent, obviously the second one will become zero. So it will become negative. No, we are not doing mathematics. We are giving exemption. So the exemption cannot be negative, right? It can be maximum nil. Okay. So this is about HRA. Second concept is transport allowance. Again, one of the favorite of examiner, transport allowance. And transport allowance, treatment of this transport allowance is same under both the regime. It is same under optional regime. It is same in default regime also. This is same in both regimes. What it is? First of all, it depends upon the assessee who is receiving this transport. What is this transport allowance? This is the allowance which the employer gives to commute between the residence and office, right? So let's say if the assessee is not physically handicapped, he's not physically handicapped, not nor blind, nor deaf or dumb. In that case, he's a normal person, not suffering from any disability. In that case, it is fully taxable. So it will be fully taxable under both the regime, whether you are following default or you are following optional tax regime. So if the assessee is a normal assessee, not suffering from any disability, he's not physically disabled, then make it fully taxable. Only in the case when the assessee is physically disabled, including blind, deaf, and dumb. In that case, up to rupees 3,200, 3,200 per month could be exempt. 3,200 is the maximum amount. If this person is getting more than that, then deduct 3,200 and whatever is the remaining, make it taxable, right? 3,200 per month. Let's say if your question says that the assessee is physically disabled, including blind, deaf, or dumb, and this person is getting, let's say, 4,300 per month as a transport allowance. So then what you will do, out of 4,300 you can deduct 3,200 per month. This would be taxable. Let's say he's getting it for the entire year, so you can multiply it by 12. If it is specifically mentioned that we have given this allowance for 6 months, 7 months, 8 months, you can multiply it accordingly. Correct? Okay. And if this person, let's say he's getting just 2,000 per month, see, if this person is not disabled, make it fully taxable. But if this person is disabled, then we can deduct 3,200 is the maximum limit. So in this case, we can deduct only 2,000 rupees. So it would be fully exempt. It would be 0. Multiply by any number, it will remain 0. So in this case, it would be fully exempt. If it is up to 3,200, make it fully exempt. If it is more than 3,200, whatever is the excess of 3,200, make it taxable. Easy. Okay. And it is similar in both the regime. Please, for physically handicapped, do not make it fully taxable under default regime, because the treatment is same under both the regimes. Okay. The third is education facility, important one, education facility. See, if this is a perquisite which assessee is receiving from their employer, so it depends that who is getting this education. See, if the education is received by the assessee himself or herself, that is, employee is getting the education. So whether the cost of this education is 100 rupees, 1,000 rupees, 10,000 rupees, 1 lakh rupees, 10 lakh rupees, irrespective of the amount, if the employee is getting education, please make the perquisite as nil. It is a tax-free perquisite. Why? Because we generally believe if the company is spending on their employee, it is for the company's own benefit. The employee will be more skillful, he will be more knowledgeable, so that he can contribute in the progress of the company. So this, we believe that this is more beneficial for the company, not for the employee. We understand that although the employee is also getting benefited, but in this case it's a tax-free perquisite, we will not make it taxable, right? However, if this education is provided to their family members, to other person, then make it taxable, right? So if this education is provided to the employee, it is a tax-free perquisite, but it is provided to other persons. Other person could be their family members, right? Their children and all, their family members. It could be employee's spouse, it could be employee's brother or sisters, it could be employee's children. So in that case, it is taxable. It is taxable. So whatever is the benefit which the employee is deriving out of it, that would be a taxable limit. It is very easy. Please don't learn about it, right? Just understand the logic behind it. So whatever is the benefit. So what is the benefit? So if the employee is getting, see, if his children is studying in some school and if the employer is paying the fees of that school, so this is the benefit. Let's say something is recovered from the employee, subtract it from it. Correct. So let's say whatever is the cost of the employer. So for other person, make it taxable. How much? taxable at whatever is the net benefit which the employee is getting. So how you will calculate the net benefit? It's very easy. Whatever is the cost of the employer, whatever is the cost which the employer is incurring. Let's say employer is paying the fees to that school or college. So cost of employer, yeah, cost to the employer, whatever you can say, cost of employer minus if there is any amount recovered from the employee, just deduct from it. You will get the benefit. This benefit make it taxable. Correct. Last point, which is important. If this education is provided in employer's own college, own institution, own school, right? Employer is the owner of this school or college or institution, whatever is the case may be. So in that case, cost of the employer might be nil, right? Why it might be nil? See, if there are hundreds of students sitting in a class, and if some one boy or one girl, one student comes and sit in the class, what is the extra cost which the employer is incurring? Might be nil. So in that case, sir, should we take the value as nil? No. In that case, if this institution is owned by the employer, it is owned by employer. This is employer owned institution. Are you all getting this? Then in that case, instead of cost of the employer, we will take the cost of the what the similar institutes charge in the same locality, in the same city, in same locality. What is the value of what is the fees of similar institution? In that case, you can take the similar institution value as the deemed cost of the employer. It is although not the actual cost, but in this case, we will take a deemed cost, what the similar institute charge, which is in the same locality or same location, minus any amount recovered. This would be remain the same, minus any recovery. Right. Last thing. If it is the case of employer owned, if it is the case of employer owned institution and the education is provided to children, I'm again repeating, this is important. If this is the case of employer owned institution plus it is provided to children of the assessee, in that case, we will first of all calculate this value of perquisite. First of all, calculate the value of perquisite, value of similar institution minus any recovery, right? This is the value. If this value is more than 1000 rupees per month, if this value is more than 1000 rupees per month, make it taxable. Make it taxable. Whatever. Let's say after deducting, it is coming as 1100 per month. So make it taxable. Entire 1100, make it taxable, right? And if it is 1000 or less, in that case, you can exempt it. I'm again repeating, both this 1000 criteria, this 1000 thing will only come into picture when these two conditions are satisfied. First of all, the institution is owned by the employer. Second, it is provided, plus it is provided to the children of the employer. And children, you all understand, in Income Tax Act, we take stepchild also and adopted child also as the children, not grandchildren, right? Okay. So if both these conditions are satisfied and if this value is up to rupees 1000, then you can exempt it. But if it is more than 1000, should I tax whatever is the excess over 1000 or the total amount? Total amount. If it is 1100 per month would be taxable. But if it is 1000 or less, make it exempt. And for how many children we can make it exempt? For 2? No. Here there is no limit of children. See, in children education allowance, we have limit of 2 children, but here we have no limit. So here it could be any number of children, 2, 3, 4, whatever is the case may be. Okay, so this was about education facility. Let me do a quick summary of it. So if it is provided to the employee, whatever is the amount, make it nil. No perquisite value, 0. For other person, it is taxable. Whatever is the cost of the employer minus any amount recovered, make it taxable for other person. For children, make it taxable. If it is less than 1000, see, it is not employer owned hospital. See, 1000 thing will come only into picture if both these two conditions are satisfied. Got it? And for employer owned institution, similar institution value minus any amount recovered. But it is the case of both these conditions are getting satisfied. It is provided to children. So you have to see whether this value is coming up to 1000 or more than 1000, then work accordingly. Got it? Okay. Okay, another important prerequisite is sweat equity shares. You all understand what are sweat equity shares. So, whatever is the benefit which we are deriving, whatever is the benefit which the employee is deriving, make it taxable. See, how much is the benefit? Whatever is the fair market value of these shares which the employee is getting minus any recovery if employer is charging anything from the employee, so you can deduct any recovery. So if they are given free of cost, so then the recovery would be zero. If they are provided to the employee at concessional value, so let's say 500 value share, the fair market value of the share was 500, and we are asking employee to just pay 100 rupees. So how much is the benefit? 400 rupees per share is the benefit into number of shares. That will be the perquisite. This is easy, right? But sometimes question can also give you fair market value of different dates. So you have to take the fair market value on the date on which the employee exercise this option, exercise the option that yes sir, I would like to avail this option of sweat equity shares. So in this case, the fair market value on the date on which the option is exercised. So if the examiner will confuse you, they will give you 2-3 dates. They will give you the date on which it is offered to the employee. They will give you the date on which it is allotted to the employee. They will give you the date on which the option was exercised. So which date is important? The date on which the option is exercised, right? Okay. Should I go in more detail? Okay, let me go in more detail. If question comes like this, that they are giving you fair market value on the date the option is exercised, and the share can be listed, share can be unlisted. For unlisted, we have no issues. For if the share is unlisted share, then we have to it. The question will give it to you. Whatever is the value determined by merchant bankers. In that case, whatever is the value which is determined by the merchant banker, that will become fair market value. So for unlisted, don't worry. Question will specifically give you the fair market value which is determined by the merchant banker. But if the difficulty level of the paper is quite towards difficulty side, right? So in that case, they will give you the fair market value. They will give you the date on which the option was exercised, but they will give you two value. They will say on this date, this is, let's say this share is listed on the stock exchange. So they will give you the opening value of this date. They will give you the closing value of this date. So which value you have to take? You have to take the average of this. Please take the average. So the fair market value on the date on which the option is exercised. So if the question paper is quite at difficulty level, then they will give you that it's a listed share, and they will give you the opening value and closing value of this date. So please take the average of it. If still they will make the paper more difficult, they will say that on this date on which the option was exercised, the stock market was closed, there was no trading on that stock exchange. So what you have to do is you have to go to the last date on which the trading was happening, right? Let's say this date was of Saturday, so you have to go to Friday, last date, right? And again on last day, they will give you the opening value and closing value of that day on which the last day on which trading was happening on the stock exchange. So still you have to take the average value? No. In that case, if you are taking a different date, please take only the closing value. So if you are taking the same date, take the average. But if you are taking any different date because of the reason on that day the stock exchange was closed, or and on that day there was no trading on in this shares, in that case you have to take a different date. Then only in that case take the closing value. Okay, let me give you one more point. If they will say that the share was listed in more than one stock exchange, 2 stock exchange, 3 stock exchange, sir, which stock exchange we have to take? So you have to take only that stock exchange where there was highest volume of trading. So wherever it was, they will say that this share was listed on National Stock Exchange, this share was listed on Bombay Stock Exchange. You have to take only one stock exchange where there was a highest volume of trading, right? They will not go in that detail, but please remember that you have to take fair market value on the date on which the option is exercised minus any recovery. Got it? This is about sweat equity shares. Easy. Are you able to recall all these provisions? Okay, the last point for today is sale of assets to the employee. If any asset is permanently transferred to the employee. We are selling this asset to the employee. So simply, see, these perquisites are very, very easy. Please apply your logic, apply your brains. It's very easy. This will say, so whatever is the benefit which I am getting, whatever is the benefit is the I am getting, the employee is getting, that will be the perquisite value. See, tell me, if a computer is purchased by the employer, some 2 years back, they have purchased a computer. Let's say they have purchased a computer of 1 lakh rupees, right? And now they are, after 2 years, they are asking the employee, do you want to purchase this computer? We will give you just for rupees 2,000 rupees. We will charge just 2,000 rupees from you. You can take this computer. Is this a benefit? The answer is yes, sir. It's a benefit. How much is the benefit? Can you say that, sir, the computer was worth rupees 1 lakh and now we are getting for 2,000 rupees, 98,000 is the benefit? No, not 98. Why? Because this computer is a used computer. It's an old computer. So you have to take, you have to first of all see that for how many years this computer was used. So let's say this was used for 2 years, 7 months. Please ignore 7 months. Only take 2 years and compute the depreciated value. So simple, if I put it in a simpler language, I can simply say, first of all, calculate the depreciated value of the asset. First of all, calculate the depreciated value of the asset minus any recovery. Minus any recovery. This is the benefit. Please don't take the original cost minus recovery. No. First of all, calculate this original cost is important to calculate the depreciated value. So of this asset, whether this is computer, car, AC, any other asset, first of all, calculate the depreciated value. And this is the depreciated value of today minus any recovery. Now the question comes, sir, how we will calculate the depreciated value? So it depends upon the period of usage. So you have to take, first of all, please remember that you have to take only completed years while computing this depreciation, right? So if this is used for 2 years, 11 months, please ignore 11 months. You have to take only completed years, right? 3 years, some months, please ignore that part period, only take the completed years, correct? Okay, then compute the depreciation. For computers, sir, what would be the rate? We understand on computers we have 40%. No, please don't take that PGBP rate. That is for calculating the depreciation for PGBP assessee who is getting income from their profits from business and profession. That is the depreciation applicable on those assets. Here we are specifically concerned. We are just concerned with the perquisite value. So here the depreciation rate is something else, right? This is only for the purpose of salary purpose. So see, if it is computers, then the depreciation rate is 50% and the method you have to take is WDV method. And for these are the rates which you should remember for this perquisite. And for cars, it is 20% rate, WDV method same. And for any other asset other than computers, laptops, other than car, for other asset, the rate is 10%. And here you have to follow SLM method while computing the depreciation. But please calculate the depreciation only for completed years, right? You might get confused, sir. For computer, we know that it is a tax-free perquisite. No, I am discussing sale of asset. You have sold the computer permanently. See, for computer laptop, if it is given just for use, a temporary use, whenever you will leave the organization, we will take it back. If it is used for the computer, then it is a tax-free perquisite. Right now, I'm talking about the transfer of asset, right? So for computers, laptop, take 50%, cars 20% by WDV method, and for other assets, take 10%. And only for your completed years, part of the year should be ignored. Got it? Calculate the depreciated value. So let's say this is 2 years, 11 months old. I'll ignore this part of the year. I'll take just 2 years. And if the original value is 1 lakh, so we have to calculate 50% WDV method for 2 years. So for first year, if I'll apply depreciation 50%, it would be 50,000. Remaining value will become 50. Second year, it would be 50% again, 25,000. Remaining value will become 25,000. So the depreciated value is 25,000 of this computer. And for how much we are getting? 2,000. So 23,000 is the perquisite. Got it? So these are quite important adjustments which can come in your salary, right? Some students was asking me to cover the salary portion. although I'm not covering the entire salary, but still I would like to cover some important topics which are there in salary. I'll be making some 2 or 3 more videos if you want on salary. I would request you, if you have already seen this much, I would request you to please keep on commenting on these videos, because actually it motivates me. It's a means of communication, because I'll not be able to know whether you are getting benefit out of it. What is your view on the on these lectures or on these videos? So I would request you to, because that actually motivates me. So I would request you to please keep on commenting also on this video. Right now I request you, please comment on this video. Correct. Okay, so we'll see in the next lecture. Till then, thank you so much. Bye bye and all the best.